Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bullish scenario where we are looking for an ABC to the downside for then continuation to the upside to at least take this high over here at 28.6k. Now in this scenario we're then looking for a 5-3-5 structure where the most common target for wave C is between the 1 and the 1.236 trend-based fib extension taken from the high to the low of A to the high of wave B, which is between 26.8k and 26.5k, and just above this area we do have some additional support which is sitting between 26.8k and 27k. Now what is also interesting is that a wave C needs to at least take the low of wave A as a minimum target, but the low of wave A over here on my chart has not yet been taken. As you can see, we have a low and then over here we have a higher low. But Bybit already took this low over here with the wick. Now the fact that Bybit already took this low increases the probabilities that other charts will follow and also take the double bottom over here. In general, if price leaves a double bottom or a double top, the probabilities are high that price will eventually look for the liquidity at the double bottom or the double top. Now in this scenario we are then looking for a 5-3 and a 5-wave structure to the downside, which means we have to count an impulse to the downside over here. Now if I look at an impulse, then this is how I count this structure to the downside. So we then have over here a wave 1 followed by a wave 2, 3, 4, and now looking for a wave 5 to the downside. However, this wave 5 is much longer in time compared to this wave 1. So wave 1 and wave 5 do have a relationship with one another. Usually time-wise and price-wise the relationship is around the 1-to-1, but at the moment time-wise this wave 5 is much longer in time already compared to wave 1, and also price-wise wave 5 has to make a much bigger jump to the downside to at least get below the low of wave A in an ABC scenario. So that lowers the probabilities a little of this being actually a wave 5 to the downside. Something else that is important is the blue 4 and the green 4 over here. So in this scenario what you can see is that the blue count is a sub-degree count of wave 3. In wave 4, we are looking for 3-wave corrective structures. However, this looks very much like an impulsive structure, but you can't label this as a finished ABC in a 5-3-5. This move looks very much like a 3-wave structure over here, not a 5-wave move. And also, if this is somehow an ABC, then wave C did not take the high of wave A, which is a minimum requirement for a wave C. So that lowers the probabilities that this over here is correct. However, if this is an A, B, and we expect another wave C to the upside, and then we move this wave 4 to the right, then we get a problem with the targets for a wave 4. So the maximum target of a wave 4 is the 0.5, and as you can see, the 0.5 has been hit multiple times over here. But if this is an A, B, and we're looking for a C up, probabilities are very high that we're gonna hit the 0.618 Fibonacci, which is like an invalidation for a wave 4. It's an incredibly rare target for a wave 4. I've never really seen it, so for me I always acted like it's always an invalidation to me. And also an invalidation is overlap with this wave 1 at 27.861, but we're far away from reaching that level at the moment. But it just shows that it is not preferred to have this wave 4 or have another leg up for wave 4. So preferably wave 4 ends here. But the main issue we then see, right, is the structure of wave 4. So I can change it a little bit and move 4 to the left, 5 to the left, 3 to the left as well. And now inside wave 4, we're looking for a WXY, a flat any corrective structure zigzag over here. Now, even though this doesn't look too great as a zigzag, we do get a 3-wave structure which we can label a WXY, where the 0.618 is a valid target for wave 4 taken from the low to the high to this low over here, which is a valid target for a wave Y. And then after wave 4 is in, you expect continuation to the downside in an impulsive structure. But you do see that it is quite a mess, because now this wave 4, where is even wave 4, right? What is wave 4 over here? If this is the low of 5 and then an A, B, C, where is wave 4? over here, because we do have a big wave 2, but we have no structure for a wave 4. Like wave 2 is this big. Usually a wave 4 is longer in time than a wave 2. So this leads to a problem as well and doesn't really give confidence in this particular count. Now that doesn't mean we can't go to the downside, as we constantly have bearish CVD divergences building, which I will show in a second. It's just that potentially the count that we have over here is incorrect, and we might be in a more complex sideways structure, in potentially a WXY, WXYXZ, something like this, but I need more time to figure that one out. So if we then look at the bullish scenario over here, then what we are looking for is this to be the low, this to be a wave A or 1, 2 or B, and we look towards the upside for a wave C or a wave 3. Now in this particular scenario, wave A over here is very short, and you can see wave C is very, very long. Wave C is about 10 times longer in time compared to wave A, which is not what you want to see. That is, I mean, wave C, yes, there's a higher probability wave C is longer than wave A, absolutely, but this long is very, very rare. But in this scenario, we then have an ABC, C reaching the 1.618, which is a target for a wave C, reaching the 886, which is also a target for a wave B as well as a wave 2. But the 886 is more rare for a wave 2 and more common for a wave B, meaning that any move towards the upside from this low has a higher probability of being a wave C compared to a wave 3. But if we are then looking for a wave C to the upside, then preferably you get a continuation over here, a bit of like a solid impulsive structure, right? Because now the problem is again time of A compared to time of C. Just look how long this sideways range is already in price compared to the time it took for this move to the upside. If I take a trend-based fib time over here, or fib time taken from the low to the high of A, put it on the low over here of this wave B, toggle on the 1-to-1, you can see we already blasted far past the 1-to-1 fib time. So this move is already much longer in time compared to this wave A, lowering the probabilities of this particular scenario as well. Now, this CVD can give us better clues of what might be happening, because we have been grinding towards the upside, and in the live stream earlier today I mentioned, hey, we might have a potential high here. If not, the bullish scenarios on the higher time frame are not looking really good at all. We could potentially get another move up for a wave Y and then a zigzag 535 on the higher time frame. Make sure to check out the live stream. But in general, probabilities for a bit of a bigger move towards the downside, including the double bottom, Bybit already wicking this bottom as well. You know, probabilities together with these CVD divergences are not looking too great for a move towards the upside. So even though the exact count of this structure is not 100% clear, based on what we see CVD wise as well as the counts on the higher time frame, probabilities do increase that we are eventually looking for a move towards the downside. Either this being the high and we're already looking for moves down, that's why it's so important to look for a bounce of wave C or not, because there might just be continuation, or this is indeed an ABC, you look for a move up to 29k, but then the probabilities are still higher to find lows below 24k as it stands. And I will show you that again in the morning video tomorrow morning, as I've been speaking about the higher time frame scenarios in the morning video today, as well as the live stream. So that's why I zoom in to the local price action. So if we look at the CVD divergences, you can see that over here with this high, as well as these, we had bearish CVD. With this high and this high, we had bearish CVD. Over here, we have a bounce to the upside, but we have more bearish CVD divergences. We also had a little bullish one, by the way, which played out. But the bearish CVD divergences eventually played out as well, pushing price down. Then on the 15-minute, we have bullish CVD divergences over here. However, we had a bounce up, move to the downside again, a second bounce, and now bearish CVD divergences between these two highs over here. So I can show you the 15-minute, and you will see we do have blue CVD divergences, bullish, higher low in price, lower low on blue, bullish CVD divergence. However, on yellow, you see bearish CVD divergences. First of all, lower high on price, higher high on the CVD, that is quite clear. But secondly, lower high on price over here with this pivot and this high, but still look how high the yellow line is compared to the yellow line, the CVD line of this red candle being the high, right? Still a higher high on the CVD, so still bearish CVD divergences. But even if you zoom in, you get a move down, you get a bounce up, and again bearish CVD divergences. Lower high on price, higher high on this CVD, pushing price once more to the downside. Look how long we have been ranging at the lower edges over here, right, of basically the range that we have been in for basically the past day. And if I pull a Fibonacci from the low over here to the high, then what you can see is that price has been very, very, very close to hitting this 886. Of course, it is not bullish for price to range so close to the 886 and on top of the 786 for such a long time, right? If you are here, preferably this was the move and you look for price moving up. However, more bearish CVD divergences, more bearish CVD divergences, price going down, down. It's not looking too great, and the moment the 886 is hit, then the probabilities are higher for any move towards the upside to be a wave C or a wave X, which means that eventually this is still a bearish structure and you still expect price to move to the downside still, to then take the double bottom or at least take this low. But honestly, if you take this low, probabilities are really increasing to take the double bottom here as well. So the fact that price has been ranging here now for such a long time, not having a proper impulsive move to the upside, constantly being countered by bearish CVD divergences, just creating the context of what price is doing in combination with some Elliott Wave knowledge does give us the probabilities of price to look towards that double bottom that we have been aiming for a while now. It is important to observe the reaction over here at the double bottom. So the double bottom, if we get it, of course, 27,160. First of all, we have to observe the reaction here. Second, the reaction at the target box. Third, potentially some support in this wave C target area for a potential A, B, and then a wave C. However, we can just as well continue moving to the downside based on the higher time frame structures we have, right? And I will make sure to show that tomorrow morning in the video once again. And if you don't want to wait, make sure to check the stream and the video of this morning. So yeah, this is currently the probabilities. Quite a pain in the ass to count this structure over here in a lot of detail, but together with CVD and creating some context with the double bottom, the ranging over here locally, probabilities are higher for price to take this low, hit the 886, which eventually means taking this low, which then eventually means also taking this low, because if you take a fib from the low over here to this high and you drag it to the right side, you can see the 886 is already hit. This will be the second time it's hit, and the thing with the 886 is once it's hit, you want to see price fly. You don't want to see it coming back again, as then the probability is increased to take the low. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best indicator you can use in my opinion, which is that CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.